Welcome back. Well, gold prices are the one asset class which have been doing well amidst all this global volatility. George Alexander Muthur is Managing Director at the largest gold financier in the country. Mr. Muthur, it's a pleasure to have you with us here. Thank you very much for your time. The general belief is that when gold prices rise, it helps gold financiers as well. I mean, potential customers, existing customers are able to borrow more against the same quantity of gold. Could you tell us historically if that is the case?
Thank you. Good morning, anyway. As you said, international gold prices are hitting historic peaks. I think they have even breached the $2,000 mark, US dollar per ounce. I think it may go even up to 2050 or up to 2100 if the financial, the problem in the financial sector or the banking sector in the West persists. So it can still go up. Having said that, you have answered the question, or you have answered what everybody has in their mind. When gold prices go up, the gold loan demand also goes up. Yes, correct. It is not relative or exactly proportional to the gold price. It is that when gold price goes up, more people realize that the gold ornaments which they have are more valuable. Definitely, when they read in the newspapers that gold price is going up, the little or the amount of gold they have with them, they realize, they understand its real potential. And I'm sure this will help more and more people to come into the organized sector for lending against gold. So that is one thing we see for the last 1-2 years. We have seen that more and more people are using the gold loan as a means to take loans. The banks have also advertised about this. So overall, the demand for loan is there. And gold loan is the easiest form of credit even for a person without any CIBIL score or negative score, etc. This is the best option. But to answer your question, yes, when the gold price goes up, more people are able to take some more money on the existing gold. That is the definite.
Okay, all right. Good morning, Mr. Muthur, and always good hearing your thoughts. Well, higher gold prices could lead to better footfalls. Hopefully, the asset quality as well issues will be behind, because higher gold prices are obviously good for your business. Give us a couple of numbers, though. The banks, suddenly, they have upped their game. And yes, they're growing on a very small base, their gold portfolios. But that's clearly, hurting your penetration to some extent. My question to you is, what kind of AUM growth are you factoring in? For the past quarter, your tonnage, I think, was 175, which was down close to 100% on a quarter-to-quarter basis. So what kind of gold AUM growth are you factoring in for FY24? If you could give us in value or tonnage terms.
Yeah, see, the value of, I don't think the tonnage is a real value. What you should look at is the amount of loans you have given, the AUM. The AUM has been flat. Yeah, the AUM has been flat in the first 2 quarters. Third quarter, it has stabilized and it has started growing. And we should see a decent growth in the fourth quarter. We had said earlier that we would be looking at, instead of 15%, at least a 5% growth in the fourth quarter or finally the end of the year. So we may end the year with definitely more than 5, 6 or 7% growth in this year. Coming to the second year, the next year, what is you asked, 24, I think we should see definitely come back to the old growth rate of 15% in the gold loan portfolio. What we expect in financially 24, yes.
So mid-single digits for this year, and for next year, you're guiding for mid-teens growth, gold AUM growth.
Right, correct. You're right, yeah.
All right, that's great to hear, Mr. Muthur. And I'm assuming some of it is driven by what you told us the last time you were with us. You said, and I quote you, that newer competitors like banks and NBFCs are starting to realize that gold loans is not a bed of roses, is how you put it. The feedback from your staff on the field is that enthusiasm for pushing gold loans is fading. Enthusiasm on the part of these banks, NBFCs, etc. Have you seen those trends becoming stronger?
Yeah, what growth or what high growth they were the banks, etc. I wouldn't say about the NBFCs. What the private sector banks and the public sector banks were showing in the first 3 quarters, I think it is waning. The growth rate is waning, but still they continue to grow, but not at the pace at which they were growing earlier. That's exactly what I said. It's not a bed of roses. Operationally very challenging. not at all easy, operationally challenging, especially when the portfolio goes up, when the portfolio become big, challenges also there. But having said that, earlier there was always a talk about regulatory arbitrage in favor of NBFCs. But today, if you look at it, the regulatory arbitrage of gold loan NBFCs versus a bank is today in favor of the banks. Banks have a regulatory arbitrage which is favoring them, which is not there for the regulated NBFCs. That is talking about the loan to value. The loan to value for the banks, the bank regulator had increased it during the COVID period from the 75% to 80, 85, and 90 only for the banks. But it was withdrawn more than 15 months back. So in January of 2022, it was withdrawn. But even now, quite a few of the public sector banks and the private sector banks continue to give more than the 75% LTV. We have taken it up as an association. The Gold Loan Association has taken it up with the regulators, and we have put our point that there should be a level playing field.
All right. Mr. Muthu, in the last quarter, there was some improvement in your NIMs because those teaser loans, they got out of the way. So that's why your NIMs improved to around 11.9 to around 12% approximately. Now you're in a catch-22 situation, actually. I'll tell you why. Because either you grow your book or you skim off some kind of yields or some kind of margin. So we'll see how that goes. But the cost of funds is going up and bulk of your borrowing is from banks. What is the outlook on NIMs, give and take everything? The rising rates, the yields, what are the NIM numbers we should work with?
So I think the cost of borrowing has gone up. In the last 1 year, it has gone up by about 100 to 125 basis points, the bank borrowings. So not only the bank borrowings, the NCD rates, whatever the borrowing rates have gone up, we have been able to pass on a part of it to the customer. And talking about yields, we would talk about the spread. We have had a very good years. We have a spread of 12, 13, etc. But going forward, it should stabilize at 10 to 11% the spread. We should be able to stabilize going forward also.
Okay, got that. Just one point on that, the fact that you've approached the regulator. How much of a factor is this? Many of these institutions lending at LTVs of over 75%, and you asking the regulator to level the playing field. Are you hopeful something will come off the representation that all of you have made? And by when?
Thank you. We have made the representation. We hope it will come. But I think a better solution would be to ease the LTV and give the credit risk monitoring mechanism to the lending institution itself, because we have been in the field for such a long time. If you want to do little more than 75 or 75, 80, let the credit call be taken by the institution. That's also we have put forward. But anyway, we are trying to learn to live with this, and probably we hope the regulator will put a level playing field with the banks, etc., as far as the LTV is concerned.
Okay, all right. Final question, Mr. Muthu, before we let you go. You've got approval to open, I think, 150 branches from the RBI, which is good news, and that's much better than your nearest competitor. Could you tell us how many have been opened so far? How many are you looking to open? And also, I'm looking at various job portals. You're hiring as well, at a faster clip. So you're more confident, I think, in terms of growth as well as opening branches. So give us this branch number. How many have been opened so far, and how many will open in FY24?
Okay. So of the 150, we have already opened 140. Another 10 will be opened in this month. And after that, we are approaching the bank for the next set of 150 or 200 branches. So at any rate, we would be opening. We can go only up to 200, 300 branches maximum in a year. But it is not that we are just waiting to open branches, because the existing branches can also take up more than half or a little more than half their existing business through the existing branch itself. But going into new geographies, new areas, new places, new locations is definitely a thing which we have been doing. And so to answer your question, the 150 which we have got permission, it will be completed this month itself. In the next couple of days, it will be completed. And the next set, we should be going for approval and hopefully opening those branches in the next year. Maybe 150, 200 is in the next year also.
All right, Mr. Muthu, we'll leave it there. Thank you very much for your time. Appreciate you joining in and running us through what you're making of things at this point in time. Definitely expecting an uptick for FY23 AUM growth of about 6-7%, but 24 the growth is expected back at 15%. From Muthoot, and reiterating some of the comments, emphasizing that competitive intensity seems to be coming off a little bit from banks and BFCs, banks especially. All right, the market is doing what it is doing. I mean, about 30 points higher, huge amount of volatility still continues. 30-40 points is getting cut up and down just like that. Midesh Thakkar is joining in on our special segment, Charting Trends, where we look at things from a slightly medium to longer term perspective. Midesh, good to have you back. Thank you very much. What should we start with? Should we start with indices or should we start with specific stock ideas?
So Prashant, my sense is that I think, let's take the index first. I think there's something which is very important, which could possibly happen on the charts of Nifty. We plot some moving averages on the monthly charts. Now, monthly charts typically will see a crossover of moving averages once every few years. The last time, we got a monthly crossover on the Nifty on the positive side was, if you look back at about 7-8 years of history, the one we got was in 2016 May, when the markets rallied from sub 8,000 levels to about 12,000 odd levels. Before the COVID thing happened, then we got a negative crossover. And post-COVID, we got a positive crossover of averages, which was in August, September of 2020, which saw the index rally from 10,800 levels to about 18,500-600 levels on the upside. Now, I think, we are in the fear of recording a negative crossover of averages on the monthly charts. It hasn't happened as yet, but the short-term averages started declining with a good velocity from the higher levels and could possibly, if we don't reclaim 17,500 very soon, could possibly see a negative crossover happen. If that happens, then I think we are looking at a good correction which could evolve in the next 4 to 6 months, and the index could possibly revisit the lowest monthly closing, which ended in June 22, which is about 15,780, and maybe even 15,250, which was the weekly closing. So I think the markets will be under pressure until we start getting past 17,400, 500 in the short term, and that looks slightly on the unlikely side. So I'm possibly betting that rallies close to about 17,200 would be good chances to build upon to your short positions. Take a 300 point kind of a stop loss, and there's a good chance of a positional move of around 1,500 points on the downside.
Okay, all right. Okay, Mitesh, took note of that. We need to cross that 17,200 to 17,500. Otherwise, there's a risk of a sharp correction by close to 1,000 to around 1,500 points. Let's talk about a couple of other indices. The auto index. How are things shaping up out there on the charts? What's it appearing like?
So, Nigel, I think the reason I picked up auto index is that, when I was worrying about the Nifty going into corrective mode, I was wondering which sector possibly could, be one of the weakest and could underperform the overall index. And the Nifty auto came on the top of that list. I think, the Nifty auto stocks, if you look at the individual charts or the Nifty auto index itself, looks like, possibly they've played out a good up move and now are on the risk of, going through some kind of a significant pullback or a correction. To my understanding, I think the Nifty auto index could, possibly see a decline to about levels of 11,700 to begin with. That is the minimum which I'm penciling. So that's not very far away from here. 600, 700 is only about 500 points. But more logically, if you look at it, I think the March 22 monthly closing low of 10,550, I think that's the logical target for the Nifty auto index, which means that the Nifty auto index could itself correct by about 14-15% from here, and therefore broadly underperform the broad markets and also put pressure on the Nifty as well. So I think the Nifty auto stocks, and I've in the coming segment I've highlighted some stocks which are components of the Nifty auto, which are also looking where in the long term charts of weakening a lot and could go through a significant kind of a correction.
Why don't you highlight one of them, Mitesh?
I'll take two. In fact, Prashant, I've recommended two stocks, which possibly are looking the weakest amongst the auto lot, and they are Maruti and Ashok Leyland. Now, if you look at the monthly chart of Maruti or Ashok Leyland, let's start with Maruti first. We got a monthly closing of about 94.70 in December of 17, and then a closing of 92.70 with an intraday high of around 96.60 in July of 18. I think those same levels were revisited when the Maruti stock price made a high of 97.70, but a monthly closing of around 95.30 on in the October of 22. So I think basically we've got, between 95.50, 96.50, we've got about multiple highs when the stock prices fail to record a monthly closing above that. And now what we are seeing is that post this October high, the stock price of Maruti is now getting into a weakening mode, with the momentum indicators now turning negative, expanding on the downside. The averages also started to declining. I think this could be a significant underperformer. Minimum target of 7,500 here, which I think is about 8-10% of correction, but a more logical target of 7,000 is what I'm looking at, which was the monthly closing low in October 21. I think that level could be revisited. So Maruti, one stock, which will definitely possibly go through very tough times in the next 4 to 5 months.
And you have
the other one, sorry, I'll just cover that as well.
Ashok Leyland.
Was Ashok Leyland. Again, look at the charts in 2018. We got a monthly closing of 153 in April 18, and we got a monthly closing of 154 in August of 22. So it made a similar high with the indicators weakening, because this entire rally, which culminated in August, had started from levels of 36, 37 levels post-COVID, and this entire rally now seems to be getting over. And the indicators have turned southward and are clearly expanding on the negative side, which means that the stock price has lost momentum. It's likely to give a stronger or a medium-term pullback on the monthly charts, and I'm penciling in targets of around 150, 110 as the minimum target for the stock. The stock made a monthly closing low of 116 in March of 22, and I think that level should be revisited. So about 150, 110 is what I'm broadly looking at the stock to do. It could do worse, but I think for the time being, we'll keep that as the target, giving roughly about 18-19% kind of a downside from here.
Got it. Mitesh, we're out of time, but I know you have two other names, BPCL and IOC in focus, so maybe we pick on those a little later. For now, we have to wrap it up. Thank you very much for bringing and highlighting these interesting chart setups for our viewers, as always. Thank you. 55 points on the Nifty. We are at 17,043. We'll take a very quick break here. Manisha joins in with a quick wrap-up of all the commodity market action. Stay tuned.
Welcome back. Well, the markets are holding about that 17,050 odd mark, and some of those dips today actually are getting bought into. A couple of these insurance companies are doing well. HDFC Life and SBI Life have moved to the high point of the day, and big boy HDFC Bank as well has done pretty well. But let's focus on a couple of stock specific. We have Nimesh to join us to tell us about the Standard Brokerage Report. Nimesh.
Hi, Nigel. So, both the city gas companies are buzzing in trade on the back of the CLSA note, and that was the standard as well. On IGL, CLSA has upgraded the stock to buy now. They've sharply raised the target price to 585 versus 420 earlier. On MGL, while they maintain a buy, even on MGL, they've raised the target price down to 1260. Now, CLSA believes that the regulatory regime will become more favorable from April 1st, and there is a pricing power which is returning back to the city gas companies. So the formula which has been proposed to cap the domestic gas prices at $6.5 per MMBTU will drive a 24% cut in the domestic gas prices from April 1st. And on top of it, the CNG is still a preferred fuel, and most of the OEMs are pushing for it, which will mean a volume growth as well for the city gas companies. Now, on IGL specifically, CLSA has raised the EPS estimates by 6 to 15%, and they believe the double-digit volume growth and pricing power is a rare and hence a big upgrade on IGL. On MGL, the target price has been raised largely on back of the PE multiples being raised from 11 times to 13 times, and hence they've raised the target price on MGL as well. But largely, the big call is a big upgrade on IGL, and there they've raised the target price sharply now to 585.
Okay, all right, Nimesh, thanks very much. Those stocks are actually reacting to the call which we put out right before market opening. Nimesh, thanks for that. Now, Airtel Bharti is back in focus. Rima is here with details. Rima.
Thanks so much for that. So Bharti Airtel has introduced new, cheaper family plans in the postpaid segment, and this seems to be in response to Reliance Jio's plans, in the postpaid family segment, which were made known just last week. So what Bharti has introduced is a cheaper plan. So the earlier plan for a family plan in the postpaid segment was a $999 plan, where along with one SIM, you get 3 additional SIMs. But now for a lower price point, Bharti Airtel has introduced a $599 plan. So along with this, you get 1 extra SIM. So basically for 2 people. But it's just expanding the scope of the people. If maybe earlier someone found the $999 plan expensive, now they have a cheaper offering. Now, how would this compare with Reliance Jio? Now, Now, Reliance Jio has, similar plans, a 498 plan, but this does not include OTT connections. And then they have a more expensive plan for 2 SIMs. That's a 798 plan, but this includes OTT connections. Bharti Airtel has gone ahead and introduced 2 new cheaper Airtel Black variants as well. And Airtel Black is basically a combination of postpaid, D2H, broadband, fixed broadband. So in a nutshell, basically what Bharti Airtel has done is that they've introduced cheaper postpaid plans for the family. So that's point number 1. This is to counter Reliance Jio postpaid plans, which were announced last week. It will also perhaps try and convince some of the prepaid family members to go ahead for postpaid. So they are targeting a lower value postpaid market with these plans. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, the other one that's seeing a relief rally today is HDFC AMC after a large trade took place yesterday. The street is wondering, GQG, well, they have raised some money. Where do they put that money? Time will tell. Vivek, tell us about that, though. HDFC AMC up 2.5%.
Well, absolutely right. So yesterday, in the session, you saw slightly over 2.2% of the total equity change hands, and most likely, GQG Partners has gone ahead and completely exited their stake in the company. The good part is, the entire stake was lapped up by SBI Mutual Fund. Now, as far as the HDFC AMC is concerned, the more important trigger to watch out for is that Aberdeen Investment Managers, that owns almost 10.21% stake in the company, on December had indicated that they are looking to completely exit their stake, and they had taken approval to sell 9.9% stake to a strategic partner. So that is going to be the more important trigger for HDFC AMC in terms of the stake overhang. Now, after that happens, what we understand from analysts is that, the stock that was deleted from the MSCI index has a very good likely chance of getting back into the index. So these are the key triggers, the exit of GQG, the likely, stake sale by Aberdeen, and then the MSCI inclusion is something that we are looking out for.
Vivek, thank you very much for that and good getting those details. Now, let's shift our focus to the commodity markets. Manisha is standing by with the spotlight on oil prices. Manisha, morning.
Morning, Prashant. Thank you for that. Well, yes, 12% of decline in the previous week, 4% down is how we started yesterday, but we closed nearly a percentage point on the higher side, but we have not been able to hold on to those gains. So 73 is back in case of the Brent prices there. Well, the pressure comes in as the markets are anticipating concerns on demand growth going forward. As of now, the reason that you're seeing the prices pause the kind of decline is that the global banks could avert a wider banking crisis is the cue coming in from the global markets. We've also seen the global equity markets see a bit of a buying as well. And the US Fed may pause interest rate hikes or hike it by 25 basis points is what the global broader markets are factoring in at this point in time. The support for crude also comes in from the fact that China's Unipec has bought 2 million barrels of North Sea crude for the first time in last 3 months. The Chinese import of crude for the month of March in the first half also have improved on a month-on-month and an year-on-year basis, and that has been supportive. There are reports of a France refinery also halting operations due to workers' strike there. So there are some supply concerns coming in for the international markets, which are supportive. And then markets also are watching out for the OPEC and allies meeting, which is on 3rd of April. Remember, the last big step that OPEC and allies took was in the month of October, where they agreed to cut production by 2 million barrels till the end of 2023. The street expects there's going to be no change in that. Apart from that, it is about the forecast for crude for the year 2023. That seems to be changing as well. So with mostly $100 a barrel of an expectation for the second half of this year, we've seen those numbers change. This has happened in last week or 10 days. Goldman Sachs report came in last evening where they've said that now they expect the Brent to average $85 a barrel. Bank of America has been talking about 88 for some time. Citi much lower at $80 a barrel. And AB and AMRO also have cut or revised their crude forecast at around $76 per barrel. So clearly the happenings of last 1 week seems to have changed the mood there.
Okay, thank you very much, Manisha. Appreciate you joining in and getting us that detail. Time for a quick break here. On the other side, our special segment, it's the economy. My colleague Lata will get chatting with Mr. R.S. Sodhi, former Managing Director of Gujarat Cooperative Milk Marketing Federation, to discuss the milk prices which have risen sharply over the last 6 months and more. Stay tuned for that conversation.